Folks, today we are diving into three undervalued stocks that can turn your small investment into massive gains and have the potential to make you rich. These are not random stocks picked out of a hat. These are companies with robust financials, compelling business models, expanding market opportunities, and enthusiastic endorsement from some of the most trusted analysts in the game. So if you're serious about making money in the stock market, make sure to watch till the end and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. First on our list is Primo Brands, a newly formed water-focused consumer staples company that has quickly become one of the most unique players in its space. Primo Brands is entirely focused on water, yes, just water, and operates under a long list of trusted brands like Poland Spring, Pure Life, Deer Park, Mountain Valley, Arrowhead, and Ice Mountain. These names are household staples across North America, and the company has extended its reach far beyond bottled water sitting on a grocery store shelf. Primo operates tens of thousands of self-service refill and water exchange stations across the country. It delivers water directly to homes, offices, and businesses, and even sells water dispensers. In essence, Primo has built a vertically integrated water empire. If this name doesn't ring a bell, that's because it only started trading publicly as PRMB in November 2024 following a merger between Primo Water and Blue Triton brands. While its predecessor delivered moderate and sometimes inconsistent growth, Primo's formation as a single unified company has streamlined operations and captured the attention of major analysts. Every single one of the 12 analysts covering Primo has rated it a buy. There are zero holds or sells, a clear sign of how bullish Wall Street is about the company's future. William Blair analysts have called Primo one of the best-positioned names to benefit from the growing demand for healthy hydration options. Water, as an alternative to sugar-loaded sodas or inconsistent tap supplies, is becoming a preferred choice across generations. The financials support this view. Primo has reported strong organic net sales growth driven primarily by volume. Its adjusted EBITDA margin has expanded. Integration between Primo Water and Blue Triton is running ahead of schedule, with a cost synergy opportunity of $300 million. Of that, $200 million is expected to be realized in 2025 and the remaining $100 million by 2026. The company has reaffirmed its full-year 2025 guidance for net sales, adjusted EBITDA, and free cash flow. As for the stock price, Primo currently trades at $27.05, but analysts see major upside. The average price target from 8 Wall Street analysts is $41.14, with a high of $48 and a low of $38. That represents a potential gain of over 52% from current levels. Even more promising, analysts expect earnings growth of 95% in 2025 and 20% in 2026, painting a picture of long-term, sustainable growth that investors shouldn't ignore. Next on our list is Opera Limited, a Norwegian tech company with global ambitions and a highly diversified business model. Best known for its Opera web browser, the company has expanded far beyond its original scope. It now offers an AI-integrated browser featuring a built-in assistant called Aria, and it serves a massive user base of nearly 300 million active users across more than 180 countries. But Opera isn't just a browser company anymore. It also operates an AI-driven news aggregation platform, has a growing online advertising segment, and owns GameMaker Studio, a popular platform used in indie game development. The company is a subsidiary of Hong Kong-based Kunlun Tech, and while it went public in 2018, it wasn't until late 2022 that the stock began to soar. Since then, it has more than quadrupled in value as operational growth caught up with investor expectations. The company recently blew past revenue expectations, posting 40% year-over-year growth and bringing in $142.7 million in its most recent quarter. Adjusted EBITDA came in at $32.3 million for a 23% margin, both figures exceeding the upper end of its prior guidance. As a result, Opera has raised its full-year guidance for both revenue and adjusted EBITDA. Looking ahead to Q2 2025, the company expects revenue between $134 million and $138 million, representing 24% year-over-year growth, and it anticipates another 23% EBITDA margin at the midpoint. Opera stock is currently priced at $15.86. The average analyst price target is $26.50, with a high of $27 and a low of $26, representing a potential upside of 67%. This is a tech stock with momentum, strong fundamentals, a solid dividend, and Wall Street backing all the ingredients needed for an explosive breakout in the coming months. Last on our list is Chart Industries, a company operating in the industrial space, providing mission-critical equipment for the liquid gas supply chain. Chart's offerings span everything from cryogenic trailers and LNG storage tanks to natural gas processing systems, air-cooled heat exchangers, axial cooling fans, and a variety of cryogenic and gas handling systems. But what makes this stock especially exciting right now is its transformational merger with Flowserve, a major player in flow control products like valves, pumps, seals, and energy recovery devices. Chart's latest earnings report reinforces the bull case. The company posted $1.32 billion in orders, a 17.3% increase, and a record backlog of $5.14 billion. Sales came in at $1.00 billion, a 6.6% organic increase, slightly offset by foreign exchange headwinds. Chart reported gross profit margins of 33.9%, up 210 basis points, and adjusted operating income margins rose to 19.9%. Adjusted EBITDA hit $231.1 million, representing 23.1% of sales. Adjusted diluted earnings per share came in at $1.86, while free cash flow was negative $80.1 million. Mainly due to timing in operating cash flow and capital expenditures, the company has reiterated its full-year 2025 guidance, expressing confidence in continued growth. Chart is expected to grow earnings by 41% in 2025 and another 23% in 2026. Currently priced at $198.75. The stock is trading close to its average 12-month price target of $202.75. That might seem like a modest 2% upside on the surface, but when factoring in potential synergy realization and long-term projections, the upside could be dramatically higher. This is a stock that long-term industrial investors should not ignore, especially those looking for exposure to energy infrastructure and the ongoing evolution of LNG technologies. Well, that concludes our list of 3 undervalued stocks with massive upside potential in the months ahead. Primo Brands offers a unique play on the growing demand for clean hydration, backed by a powerful brand portfolio and cost-saving synergies. Opera Limited delivers a tech-based growth story with explosive revenue, strong dividends, and a bargain valuation. Chart Industries brings the industrial strength, with a transformational merger and huge growth expectations already built in. If you're looking to turn smart money into big money, these are the kinds of companies you want on your radar. Don't forget to hit that like button, subscribe to the channel, and turn on notifications so you never miss an update on the market's next big winners.